What's going on, traders? Hope everybody had a great day. It is Wednesday, June 14th. FOMC is behind us and the Fed leaves rates unchanged. Before we get any more into the charts, don't forget, if you haven't already, please subscribe to the channel, smash that like button, and don't forget to turn on notifications. And of course, this video is for educational and entertainment purposes only. Alright, so with that being said, we've been watching this bull flag here on SPY, right? This tight consolidation taking place, and then we saw a kind of a fake break here on the 9th, and then nice continuation. We gapped up pre-CPI, but today we actually did fill that gap during FOMC, but we'll get into that price action here in a little bit. However, the first move being fake definitely played out to the Bulls' advantage today if you were prepared. All right, so yeah, now we've kind of got this interesting candle here on the daily. Of course, you can see the buying pressure coming in, pushing up price into the close. But let's see if we don't start to make a hangman, start of pattern. You know, we'll have to see how tomorrow opens. But it'll be interesting to see what the day brings us. I mean, overall, the markets were red. They were green, you know, then they were red, and then they ended green, just barely 0.12%, up about 50 cents. Final print being 437.18. But tomorrow, you know, we have quad witching on Friday, and you know, we've had this huge run here. You know, I think it would be likely to start to see some consolidation start to take place, right? A new cycle in the market. So I want to watch out for that and see if we don't print, you know, a slightly down day or an inside bar, and then end up kind of going sideways into the end of the week. And then we have Monday off. Markets are closed on Monday, so that also could be adding to the slower price action on Friday. And I'll probably be not participating at all that day in the markets. But either way, let's go over some levels that we are looking at. Still, again, there's really no reason to be overall that bearish in the markets. And actually, let me extend this trend line here out a bit, because you know, this is certainly a key structural area that we want to watch if we do start to see some selling, possibly coming into it and recapturing you know, those fake breaks, and then moves up higher again. But we're not there yet, and you know, I don't know if we'll get down here. Nobody knows, so we'll just take it, you know, a step by step, level by level. But definitely want to point out, you know, this bigger structure here. And let's hold on. What do we have? Just go into the bigger picture fibs here really quickly. Oh, that's not the right one. First, let's start off just with the intraday fibs that we will be looking at, or at least I'll be looking at into tomorrow. We put in a new swing high today, real close to that 440 area, and I'll be watching that key psychological level very carefully, even tomorrow, for potential runs up over and then fake, you know, a fake breakout, and then start to retrace. But you know, of course, I don't know, that's just all conjecture, but it's something that I will be watching out for tomorrow as a potentiality. But really, you know, for the bears to have kind of any hope of at least somewhat of a retracement, you know, and as I've said in the other videos, they've got a lot of work to do, right? And you can see kind of the double bottom that was really put in here today, and I did adjust the fibs with the new swing high, but lined up very nicely with the 23.6 right around 433.69. So you know, we'd have to really take out these lows to even be able to start to think of any type of retracement down. And you know, if we're going to be extra careful about it, you know, really these pre-market lows we're going to have to take out. And then even then, the risk to reward isn't that strong, in my opinion, because we have this 432 area, you know, which triggered this breakout that we have to contend with. So you know, we are in a strong uptrend right now. Obviously there's no denying the strength in some of the names across the board. Nvidia's just been on a complete tear. But the other thing I kind of wanted to point out as we looked at this chart here, another thing you can potentially watch for, whoops, is this channel, right, that we have been trading in. Oops. Oh, come on, I'm trying to just grab that one part. Is this uptrend channel, okay? And you know, you can probably just visualize the uptrend here as well. All right. So this channel now that we're trading in, going up here, this is what also we'll be watching, or I'll be watching for that potential idea of being short. You know, we break this uptrend, come back and retest it, you know, and then initiate a short trade. And then just taking it, you know, step by step again, because the bulls have so many levels to the bears, excuse me, have so many levels to have to break through to really get some selling coming into the issue. But eventually, you know, the markets are going to be net long, and there's going to be no one else to buy it, and then, you know, that's when you see the rollover. But like I was saying earlier, it is very possible that we just see consolidation, and you know, this is a decent range. Even if we, you know, I don't know what the range is going to be. It has to be established. But if we do start to enter in a consolidation mode, obviously we've seen this trend. We know what the market does, and here was consolidation trend. Now we could see that consolidation again. But we'll have to wait for that range to be established. But either way, even if it's just from the 0 line to the 23, that's still about, you know, $5 or so, for, you know, $5-6. So that certainly is tradable, you know. You know, I personally, since the markets are so strong overall, I'm really not that interested in the shorts trade. I would be more interested in, if it is selling off, to try to take some longs. But if we do break this uptrend, it'll be something to watch, especially if we come back up and see sellers absorb those buys and we start to come back down lower, right? So yeah, so the key area here is going to be this double bottom zone, this 433.70 area. We could even call it 50. But as I was saying earlier, as far as those retracements, they're going to have to break 432. They're going to have to break this 434.29. All these same levels are still in play. This was that major breakout again before, as we've been over in the other videos. So, you know, if we start to come into these areas, there would be areas more where I'd be likely to look at potentially going long on a trade. But if we do just continue to go up, again, I'm talking, you know, I'm looking at that 440 area. And let's go into a different chart here. I am looking at that 440 area here, this zone. You know, and if we just consolidate here, or if we don't dip, I would prefer us dipping so I could try to get along. But if we do just start to rally up, you know, I'm not chasing the breakout. Gonna wait for a nice confirmation over this key level. Usually with these key levels like this, I like to wait for a little bit longer, you know, not a 10-minute candle close over those key levels before, you know, I make a decision on whether or not, you know, it's actually being supported and there's a bid there for price. But if we do end up getting over 440, you know, I am looking 441, and then above that 444. I guess this could be 445. That's what it was supposed to be, sorry. 445, and so my other level got deleted, I'm sorry. I think it was 433.50. I have to go back in the chart. I got deleted there by accident, sorry, but I think I'm pretty sure that was it. So in that general zone, of course, you know, nothing is to a penny, so, you know, at least you have, you know that general area could offer some resistance or be a target if we do start to really get over that 440. But But yeah, as far as, that's what I'll be looking, for the upside. But as far as, and we could even say, as far as the range being developed, we could even say right now that this, you know is the range, just hypothetically. Of course we don't know, but, and this could all, be taken out tomorrow. But we could say this is the range, and this is obviously with FOMC, this is pretty volatile. This is a wide range, so I'm not sure if, this much of a range is going to hold. It could be something more. Whoops. Activate. Come on. Oh, sorry. It could be more from this swing low, right? As volatility will probably not be as strong coming into quad witching and the long weekend. But there we go. But I'll be watching that. And again, here you can see how the chasers really got hurt here. People trying to run in and chase the market down, and not looking at the bigger picture and not understanding that we still are in a bull market. And, just that first move down. I mean, certainly, I don't trade into CPI directly. I wait, as I said, until 230 to usually play the opposite reaction. So I noticed when we were down here coming into this level, I said, okay, I'm thinking I'm going to initiate some longs. And we took that, for a nice little spin. Either way, let's just trade safe tomorrow. If you've been profitable this week, great job. You've made it through the week of hell. And, the idea now is to just hold on to your profits and to still stay on that defensive line. It is no as I make this range here, it is no coincidence really. Also, this 435 area, the first after we were bought up and then we were dipped down, we got bought up again right here by these pre-market highs from Tuesday, and that's where they found liquidity to drive the market back up higher for a second time. So no coincidence there. Like we say, it's never random in the markets, completely. But it's always hard to really say what, anything can happen during these big major data days. So that's pretty much it. Let's see if they sweep these lows. Really gonna have to get below 432 and have some confirmation. Then I might consider some shorts coming down to retest these levels. But again, I much would rather prefer buying the dips until we really see some major structural changes in the market. I probably would be more interested, and I'll still be watching. I'll still be watching the channel that I drew out before on the other chart. So that may offer a opportunity, and it's something to watch out for. But as I was saying, it's just so many levels of that need to be breached. But a retracement back down to even retesting this 430 area, this key breakout that started us last week, in the beginning of last week, coming back to seeing if that actually, if there are bids still there in the auction that need to get worked out. It would make sense to me to come back and retest either, one of these key breakout areas that we saw last week. So I'll be watching for that, but again, still, I much rather be focusing on longs. So I hope that helps, and don't forget to subscribe to the channel, like this video if you found it helpful. What do you think we're going to do in the markets? Are we going to continue rally? Is a retracement in order? Are we going to chop sideways for a little bit? Would love to hear your thoughts in the comments, and take care. Have a good trading day tomorrow.